Hey, what's up, everybody? Welcome back. Talking a little bit about earnings at the halfway mark, much better than expected. This is an article, of course, on CNBC. Taken, of course, if you're an M1 finance, you can always look at your research tab. And there's always a lot of research here that you can look into for those who like to do reading on what's going on in the financial markets. So if I'll leave a link to the article, it just basically goes into the discussion. Many of the companies who were expected to not do as well as they thought are actually doing fairly well. Mostly because of what's going on with tech, and of course, basically anything online and tech is doing very well. And so I'll leave a link to the article if you want to take a look at it. Kind of what I was expecting. If you had a chance to watch my previous video, talking about a lot of the jobs that were lost were typically low wage jobs. If you were in an essential role, right, whether you were fire, police, medical, or if you could work from home, typically those jobs were a little bit on the higher paying, more skilled jobs that didn't require you to be kind of clumped up in a factory or something, right? Like lower wage sort of factory jobs. And typically jobs that were held either by women or by single women were primarily the jobs that were lost. If you've, like I said, take a look at my last video. I'll leave a link either at the top or in the description. You can take a look at it, where I post numerous articles along with videos showcasing that whenever there is an appeal for, that the government needs to keep up with the 600 a month, etc., the 600 a week, and of course with the stimulus, that most of the time they always show some single mom that's out there in need. And that's just the reality of those who are basically low income earners. Typically, whenever there's any sort of catastrophe or there's any sort of an economic hit, the ones who will be hit the most are primarily single mothers. And of course, with the huge rise in single motherhood, we're seeing more and more women are affected. And I talked about that very heavily with linked articles for you to take a look at if you're interested. I would definitely take a look at it. And that's kind of why, even though despite with the Fed earnings, with the Fed injecting money into the economy, we're not seeing a whole lot of selling that's going on. In terms of the market had been holding. Previously, you can see the levels right here. We were holding about 23, bouncing off 23 with a resistance of about 25K. We subsequently broke out with a retest that you can see right here and here. And so the market bounced several times, even retesting that 27K mark. And then of course, we were holding for a little bit about the 26K mark, right? Should be able to see that here, where the market is just bouncing, coming back, bouncing, coming back. And then subsequently, we see a little bit of a breakout, reaching back for that 27K. And then the market again over the past 2 days, including today and yesterday, the market bouncing off of that 26K sort of support level. And that's basically why I'm putting a little bit of a buy order. I bought a little bit yesterday because I saw the market bounce, and I put in another one today because I see the market bouncing. So I'm trying to buy the lows of the channels. It's basically what I've been doing. In terms of my dividend account, we are currently 11,000. Let's refresh that. We're 11,007 invested, down slightly because of today, down 116. My current dividend yield is 6.26%, which is pretty good. I'm trying to move that up to about 7.25 comfortably. The reason being is because my goal for this year, if you've taken a look at my past videos, is of course dividend investing for passive income. We're currently at about $61, and my goal for retirement is about $1,500 a month in dividends. And so for me to get there, I either have to invest overall, portfolio investment has to go higher, or I need to find stocks that are paying a good yield, but that would allow me to preserve the capital. Because there's no point in having a high yield if you literally obliterate your capital. There's no point. You're just basically losing money over the long run at that point. Of course, that is not my goal. So my goal for this year is to get to 100 a month, which I think I'll do within about the next 3 months. Within the next 3, let's just say 4, I'll be at 100 100 a month, with roughly about 18, 19K. I'm trying to get this up to, over the next couple of months, to, let's say, 6.75. Comfortably say 6.75 yield. I'll have to wait and see what the market looks like over the next couple of months, but that's basically my goal for the end of the year, is to have at least $100 a month in dividend investing, dividend returns for the month, without having too much invested. Like I said, my goal for retirement is to have roughly 250K into a dividend portfolio. And so at about 0.0725, that basically gets me. Divide that, that's my annual, divide that by 12, and that basically is my goal right there, 1510. Of course, I also have to account for taxes. So my goal is to, over the next 7 years or so, maybe we'll say 10, right, to get to that 250K mark, and then start dumping the rest of the money either into retirement account, either into the retirement account, which I'm currently, for my my IRA, we're sitting at 2,800 with a little bit of dividends. This one also has dividends. I won't be touching this account, of course, till retirement. So the goal is to get to about 3/4 retirement, while being able to live off of that 1,500 until I get to basically full retirement, where you get, my pension, Social Security, etc. So a lot of the other things that don't kick in until after, you're in your mid 60s. So my goal is to do like that 3/4 at about, let's say, 52, 55. I did start a little bit late, and I also, of course, want to live comfortably enough. So this is basically what I'm shooting for. Again, I posted this video, not the last video, the second to last one. My goal is to live as an expat in Colombia, and so that's basically, I'm just paying attention, kind of keeping that goal in mind. You can see, take a look at my portfolio. So far, a little bit down, and it's primarily because of the day. We're down 3 something on the day, and a lot of that, of course, originally I put in quite a bit of money into things like CCL, and then, of course, a little bit in RCL. So those are kind of where the portfolio is hurting a little bit, and of course, real estate having a little bit of a hard time for obvious reasons. But trying to buy buying the dips as much as I can, not buying when the market traces higher, waiting for good pullbacks, and trying to buy basically at the supports as much as possible to get as cheap stock as possible. That's basically the goal. In terms of the market, like I said before, we're basically holding above that 26K now. You can see it here. And of course, on the high is 27K. We'll have to wait and see with the next presidential election, the direction that the market is going to go. And so I'm not trying to time the market. I am basically pumping at this point. We're at about, in terms of activity, in terms of deposits, we're at about 2,000 a month now. So it's 350. That's 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So we've put in about 2,100 for the month. And that's basically, originally I wanted to start with just about 1K. And so I'm trying to push that to about 2K a month now. And that's basically my current goal, so that I can get the dividend portfolio in terms of whatever's paying me back money. I do have a little bit also in my risk. There are certain risk stocks that do play dividends, like eventually I think Play will go back to paying a dividend. TSM pays a dividend. What else? At one point, I believe the Gap paid a dividend. A lot of these companies did pay it. Wells Fargo, or I don't think RCL paid a dividend. Let me see, check this one out real quick. I don't think RCL paid a dividend. I could be wrong. Nope, it did. So that's kind of why I bought these RCLs, CCLs. Kind of why I bought them, because they were dividend stocks. And so we'll have to wait and see what happens with the coronavirus. In terms of the coronavirus, we are seeing a much, in terms of death percent, has gone down dramatically. When I was first covering this, we were closer to 6%. We were seeing typically these numbers even higher way back before we were at 2 million. And so we're seeing a much weaker virus, not as, or the medications that we're using as we understand the virus. So that gives me hope that a lot of these stocks like CCL, Royal Caribbean's, retailers like the Gap, we're seeing the Gap kind of really pushing its way out, especially because of that news with Kanye West. So a lot of my portfolio like is in a lot of these stocks. JetBlue's, I'm in the airliners as well. I do like JetBlue. I think it's the only airliner that I really do like. And so I'm kind of sticking with that one. So a lot of the portfolio is kind of beaten down because a lot of these stocks are very beaten down because of the coronavirus. And I am hopeful based off of what I see, right? Based off of what I see here, that we're going to be moving to things more reopening. We'll see the airliners, we'll see retail come back, we'll see real estate stocks come back up. And so I'm trying to buy on the lows. I'm not waiting, buying on the run-ups. I'm waiting and buying down here. So that's basically what I'm doing for the portfolio. An easy way to track for those who are interested in is with trackyourdividend.com. It's a very easy way to be able to track your dividends. Again, we're currently with 11.7 invested. We're at an annual income of $72, which brings us just to, I think, about $60, like 732 divided by 12, which brings us to about $61 a month. And my goal for the year is a minimum of 100 of dividends of passive income for the month. That will probably take me to about 19, maybe 20K, depending upon what my yield is. For the end of the year, my goal is 6.75 yield. That's basically my goal for the year is 6.75 on roughly 19 to 20K invested, which should put me just over what I'm looking for. So, right, let's just take the high end of 20K times 6.75. Oops. 0.0675 divided by 12. So that will roughly take me to well above my goal. Again, that is my goal for the end of the year. I've got to set some sort of a goal. It's always good to have a goal to keep in mind. So that's my goal for the year, is to get to 20,000 into dividends, right? Anything that pays me back money with a 6.75 yield. My goal for next year is to get that to about 7.25, hopefully by the next quarter, by 2021, end of 2021, first quarter, and hopefully with about 30,000 invested into dividends. We'll have to wait and see what the future holds. That's basically my goal. A little bit of an update for today, talking about dividends. You can see the portfolio still holding, doing fairly well, and that's what I want for a dividend portfolio. While you do want to have a good amount of money earned in dividends, you don't want to blow out the account in terms of losing your principal, because it makes no sense to have a good amount earned but you're losing thousands of dollars in principal, because then once the next year comes, you may end up losing those stocks that you invest in may go down. Like what is it, Sybil? Right? This is another perfect example. This is not what you want. Even though you may have a high yield, this is not what you want your stock to look like. I'm more comfortable with something like Iron Mountain. Iron Mountain that trades, for the most part, it trades fairly sideways, right? Another stock like T, over the past couple of years, it traded fairly sideways from about 2013, anywhere south of $30, in my opinion, was a good buy. Once this stock was creeping, closer to $40, obviously you would not want to buy, because you're just basically going to lose your principal and you'll end up having to average down too much in the stock. That's just basically my kind of thought process. My thought process behind it. I think another one was LTC, I think, was another good one. I'm really being very, I wish I had gotten a bit more stock down here. Obviously, you can just take a look at taking a look at the chart that this was a very solid buy, but overall the trend, you can see the direction of the trend. And so I'm trying to purchase stock as cheaply as I can to maximize my amount of dividend plays. This is basically my goal for my dividend portfolio. Like I said in my previous video, I'm looking to live abroad for retirement. So I want to hit that 1,500 just in dividends, which is basically my goal of around 250. I say 250 to 300,000 over the next, say, let's just comfortably say 10 years, which is basically my goal. Anyway, this is just basically my update for this is, what is it, the 30th, right? 31st of July. I'll be doing another one. Probably I'm going to try to do one, let's say once a week, right? So I'll try to do this every Friday. So every Friday I'll post a video for this account talking about dividends, the different dividend plays, and we'll do like a little bit of an update to see where the market is going. That's basically my interest as a nurse. And of course, we'll always be taking a look at the virus. Like I said, if you haven't had the opportunity to check out my last video, I would check out the last video talking about why the market is not so much affected by what's going on. And of course, I will leave a link to the article down below. You can always check out under the research tabs. I do a lot of reading. I pay close attention to what's going on, and I make my my buys and my plays, and I basically just try to play accordingly. In terms of my risk, my portfolio, my risk portion is play, space, which I have been buying down here. I started buying space down here when it was anywhere north of 14 between. I was just basically buying the channel. Every time it sold off, I bought some more and it came back up. Same thing with GPS. I'm still buying GPS. We're seeing a little bit of a pullback in GPS. I have a buy order to go in for it today. It had hit 14, I think $13 here. And of course, this was on the news of Kanye West getting involved with the Yeezys. And so we're seeing a little bit of a pullback towards the resistance, which was, towards the previous resistance, which now looks like the floor. But of course, I'll have to wait and see. Those are basically between that and JetBlue, CCL, etc. Those are basically my risk plays for, as well as tech, I should say. Anyway, this video is getting a little too long, but feel free, if you have any questions, feel free to leave it in the comment section. If you like the content, feel free to like and of course subscribe so that you don't miss out on future content. Thanks for watching. Take care. God bless.